friends, you're welcome once again. Is you, your hosts, none other than Mr. Spotter Fred, as we are doing this development of group accounts or consolidation. In this lesson, we are going to talk about further examples. Remember in our previous lessons, we looked at example 1 and example 2, where in example 1, we had an acquisition of 100%, and the date of acquisition was the same as the date of consolidation. In example 2, that's in respect to lesson 1, in example 2, the acquisition was 100%, but the date of acquisition was not the same as the date of consolidation. Now, as we come to lesson 2, we want to look at example 3 and 4. In our example 3, we want to look at a case or a scenario whereby the acquisition or the percentage of control is less than 100%. This means that there will be a balance that will be owned or held by outsiders, known as non-controlling interest. Then at the same time, we also look at the date of acquisition and consolidation is not the same. Then in this scenario, or rather in this lesson, we are also going to look at another scenario where the purchase consideration or investment, the cost of investment in the subsidiary has not been reported or recognized in the books of account. So that's what we're going to do in this lesson. Thank you very much. I believe you are going to enjoy as we continue with this development of group accounts. Here we go. Now, friends, we are looking at example 3. In example 3, we want to look at what if the acquisition is less than 100%? If an acquisition is less than 100%, in addition to that, what we have always been saying, if the date of acquisition is not the same as the date of consolidation. So we want to now bring them together. We want to look at an acquisition is less than 100%. We also bring a scenario where the date of acquisition is not the same date of consolidation. So we want to bring those elements and see how it will work. Now, I remind you, friends, if the date of acquisition is not the same as the date of consolidation, then all the retained earnings existing at that time will be pre-acquisition, while the retained earnings from the date of acquisition to the date of consolidation will be post-acquisition. Secondly, if the acquisition is less than 100%, say 90%, say 80%, say 50%, say 60%, then you need to remember that the balance shareholding will be held by outsiders, and these outsiders will be referred to us as non-controlling interests. We consolidate as usual. We consolidate the assets and liabilities as if we own 100% shareholding, as if we own 100% shareholding. But at the same time, an extra line will be introduced under the finance by section known as the non-controlling interest, and thus will represent what the outsiders are financed in the group. I repeat that point. If the acquisition is less than 100%, say 90%, say 80%, say 70%, say 60%, then the balance shareholding, call it 10%, 20%, 15%, 30%, will be held by outsiders, These outsiders will be referred to as non-controlling interests. Non-controlling interests in respect to IFRS number 3. Now, we are going to combine the assets and liabilities as if we own 100%, just taking the assets of the holding company plus the assets of the subsidiary, as if we own 100%. But at the same time, we introduce an extra line under the capital and reserves in the group statement of financial position, known as non-controlling interests, meaning there will be a working for that. We need to determine the total net assets due to NCI, and that extra line will be representing what the outsiders or the non-controlling interest shareholders are financed in that particular group. So that's what we're going to do. So example 3, as you can see, we are saying where an acquisition is less than 100% and the date of acquisition is not the same as the date of consolidation. Fine. We are saying H Limited acquired 90% ownership capital of S Limited on 1st July 2015 when the retained earnings of S Limited was 200,000 shillings. We have been given the statement of financial position, as you can see, for H Limited and for S Limited. Non-current assets, we have the property, plant, equipment, 640,000 and 800,000 respectively. Then investment in S Limited is 1 million. Then current assets, we have inventory, we have trade receivables, as you can see. We have the bank balances, we have the equity, ownership capital 1.2 million and 700,000 respectively. We have the share premium, we have the retained earnings, we have the current liabilities, the creditors, we have the required. Prepare the group statement of financial position as of 31st December 2015. Now, don't forget that this company was acquired on 1st July 2015. So the date of acquisition is not the same date as consolidation. We acquired in July 2015, but we are now consolidating on that 1st December 2015. So we need to do this adjustment accordingly. First and foremost, we need to do our working. Now, we do our working for that. Come and say, now we come and talk about the working. Remember, we are still talking about accounting for subsidiary, so that should be known. Let's look at the workings. What are the workings that will be required to do? One, we have said that the percentage of control is less than 90%. So we can even say the structure. Our structure here is where we have H Limited as acquired S Limited. This is 90% ordinary shares. On 1st July 2015, even if it was 2010, 2009, 20, it could be the same adjustment. The retained earnings at that date on 1st July 2015 was shillings 200,000. So this 200,000 is simply the pre-acquisition retained earnings. So remember, if you own H Limited owns S Limited 90%, then it means 90% is the group share and 10% is the NCI share, non-controlling interest. So we come and say, if you're looking at the ownership capital of S Limited, we have is 700,000. Then out of 700,000, there is the group share. There is the group share, which is 90%. And there is NCI share, non-controlling interest, NCI share, which is 10%. In that case, you realize that 90% of 700,000 is something to do with 630,000. And the other one is 70,000. You need to remember, friends, that the 630,000 will be credited to the cost of control to determine goodwill, while this one will be credited to the NCI account to determine the net assets due to NCI.